Hello there, my friends. Chris Marcus here with you for the Stock Pulse Network on Thursday, September 20th. Pretty wild day in the market, actually. A lot of things happening, so a good video and keeping you posted on the developments today. As you can see here, Dow surges 185 points as latest U.S.-China trade barbs are not as bad as feared. As we will dig into, I think this is an example of sometimes the headlines maybe not representing what's actually going on, yet you can see in the U.S. the market's up about 1%. Over in Europe, similar story. Asia is just getting open for the night, and the crude oil contract at 70.80. Again, here you see Dow rallies more than 250 points to first record close since January. So yes, even the Dow Jones now back in record territory, which kind of defies a lot of what is going on in the world, but we will get to that as well. Although, especially one of the reasons it's a little surprising to see that today is that, as I've been talking about all week, you have the U.S. 10-year bond getting kind of torched here. Burst through the 3% level earlier this week, now up to 3.06%. As you see, it got as high as 3.09 earlier today. And certainly if there's a way that the stock market, real estate, bond market can handle higher interest rates, at least substantially higher interest rates, I will be fascinated to see it when it happens. Quick look over at the crypto sector. See Bitcoin at almost 6,500 today and Litecoin at 56.57. Wow, big day for Ripple there, up 44%. So to dig into some of the news, here you see on Zero Hedge, the dollar is dumping as bond route spreads. So the dollar, as you can see, has been taking a beating today. And as a result, we see the yield on the 10-year is going up, which is almost, it's kind of like it's about time, given the way so many of the foreign lenders are walking away and publicly expressing their frustration with the dollar. Now, here was an interesting tweet from David Brady, who global pro trader on Twitter, also does some writing for Sprott, and has had a lot of interesting research this year. Here he mentions, could it be China that's selling the U.S. Treasury bonds? Now, it's interesting because certainly I've thought a lot about that, and if you'd like to take a look, here's an article I wrote over on Global Research, really speculating, will China, as their ultimate weapon in trade war, start dumping some of the treasuries? Obviously, the concern is that if they start dumping the treasuries, they're probably going to end up taking a big loss before they got through their entire position. And certainly I agree with that, yet again, it's like that gambling analogy. If someone keeps borrowing money and they just keep gambling it away, at some point, do you write off the loss where it is, or do you keep going deeper into debt? And here, as we can, well, let's come back to that one. But here you can see China's U.S. Treasury holdings just fell to a 6-month low amid escalating trade war. Now, as you can see here, it was not a massive drop, 1.178 trillion down to 1.171. But certainly to just rule it out entirely, I'm not saying that's what they're going to do, but certainly if I were backed into a corner and had that option at my disposal, I mean, if the U.S. keeps antagonizing China, again, whether you think Trump is right or not about what he's doing, in the end, there is a degree to which when it's the person funding your operation, maybe you want to be a little delicate, I don't know, or just call him a currency manipulator. But as we briefly saw before, interesting story, China won't devalue yuan to boost exports, Premier Li says. Although, as I mentioned in an interview with Dave Kranzler a couple weeks ago, it is interesting that this devaluation of the yuan has occurred all throughout these past 5-6 months at the same time the trade war has been going on. So he's saying they're not going to devalue the yuan. I mean, who knows the official story, but it has been devalued, and certainly could they have started the currency war without saying it? Certainly possible. So a few more stories here real quick. As you can see, if we get Zero Hedge to load this up here, you know, things not looking good. Italian bond yield spiking again. There was more volatility in the Turkish currency. And then what I think kind of matching way I started today's video, here's Blackstone's Tony James saying, I don't see an economic downturn anywhere on the horizon. I think when you add all these stories up, there's an incredibly large probability of that happening. And certainly we'll see how that goes. So that's today's wrap. As always, this video is sponsored by Miles Franklin. So if you are interested in buying gold and silver, you can visit milesfranklin.com or call 1-800-822-8080. With that said, thanks as always for watching. Hit the subscribe button, and I will see you again tomorrow.